All right, everyone, a quick look at Radical here. So we're going to look here on the daily chart and then we're going to zoom out a little bit. So here on the daily chart, this thing has wicks all over the place. It's constantly pumping and dumping. So this massive green wick here was our last huge pump. But you can see it's not really getting over your 200-day moving average and holding it as support. As soon as it gets over, it completely falls back off the table here. So from where you are right now, you can clearly see you have your 21-day EMA, your 618 here at this 191 level. So let's just measure this really quick. So if you come back down, your first stop is 191 and your 21-day EMA for about a 3% drop. And then your 50-day EMA down here for about a 5% drop. It is currently at 187. So 187 up to 191 is your area to hold for support. If you lose that, of course, your 0.5 at 179 is next for a 9% drop. And then your 382 down here at 168 for about a 14.5% drop, and then so on and so forth if you end up losing these price levels here, which is highly possible. So just kind of watch those to the downside. And of course, to the upside, every time you get over the 200, you just fall back down. So you need to get over this 786, this 200-day moving average at this 208 level, and you need to actually hold it as support and then have one of these big old candles spawn in over that support and stay above it to actually be bullish for moves higher on Radical here. So if we switch out to the weekly chart here, you can see I already have a fib drawn. Let me get rid of this little one here. If I can get this going. You can clearly see this thing's been getting stuck at your 236 at this 280 level, and it's been riding down with the 21-day EMA getting stuck here. It did get above it here for a couple of weeks, held it as support, fell back below, came back down to the bottom at 135. And we are currently back above it for the last 2 weeks here, holding that 21 as support. So simply what to watch for, you're at 196 on the macro scale. If you end up losing this 192 level, then it looks like you're probably going to end up dropping down back to the bottom at 135. So if you lose 192, you're looking at about a 30 to a 31% drop down here to 135. And then ultimately, to go to the moon, you can see you need to hold that level and the 236 for about a 43% move up to this 281 level. So 281 is your big price to beat. You can also see you do have your 50-day EMA coming in hot here. So a lot of resistance to get over. If you get over this 281 level, then you'll have a shot to actually go to higher prices and actually maybe go to the moon someday. So 281, I break over that, hold that as support. Then we'll talk about this 442 level at this 382. You can see this is where we held support back here. Now that would be resistance. And I would say if you get over 280 and then 440 here, then Radical's actually going to start going to the moon. So yeah, we'll leave it at that. Not financial advice. Thanks for watching, everyone. Peace out.